Welcome to Close of Business. I'm Alicia Barry. Hopes of a Melbourne Cup win for borrowers have faded, with hotter than expected inflation numbers all but ruling out a rate cut next Tuesday. September consumer prices chalked up the fastest quarterly rise in more than 2 years. And as David Taylor reports, wages and insurance are some of the biggest costs for small business.
Cutting inflation down to size has taken years, and it's still not quite where it needs to be. It's because many businesses, like this tree lopping company, struggle to absorb growing wages and insurance premiums, and instead pass increased costs onto customers through higher prices.
People still feel pain, and they've still got their financial pressures, so it's about being respectful to people and understanding that they've still got their bills to pay, they've got the set bills to pay.
And based on official data, those cost pressures look set to remain. Bureau of Statistics data show annual headline inflation in the 3 months to September was 3.2%, while underlying or core inflation was 3%. Economists have their eyes on a number of items in the household shopping basket that continue to push higher.
Definitely electricity costs. We are all aware how much of electricity prices are actually contained by the subsidies that the government is offering, but electricity prices are something that we need to be cautious about. On the services side, of course, all the industries which are very closely tied up to the labour market still continue to have a bit of an issue from the skill gap point of view, from the productivity point of view.
Call to the Treasurer.
The Treasurer, choosing his words carefully, acknowledging businesses and households remain under pressure.
We have made it clear that we want to make more progress on inflation. We've made it very clear that progress often isn't in a straight line, as we've seen around the world. We know that there's more work to do, and that's our focus.
Inflation is now no longer comfortably within the Reserve Bank's target band of between 2 and 3%. Economists say it closes the door on a Reserve Bank interest rate cut on Melbourne Cup Day. We can safely rule out a Melbourne Cup rate cut now.
That's not happening. That's not happening. I don't think anyone really looks at the RBA meeting on Melbourne Cup Day anyway. So there's even going to be lesser interest this time now that inflation data has thrown the cut out of the window.
That's despite the latest official jobs data showing an unexpected spike in the unemployment rate.
The higher than expected unemployment rate does create a bit of a tricky situation for the bank. They're having to balance this hotter inflation along with the higher unemployment rate. But taken together, I think the bank's pretty willing to look through the faster rate in unemployment.
Arborist Julian Parry says he thinks his customers may now prioritise emergency tree work over landscaping.
With each interest rate hike or cut, I do notice people's confidence is affected in that, particularly the week after or 2 weeks after. Everything tends to settle down after that period.
And today, for millions of mortgage borrowers, the change may come with some necessary budget balancing.
At the end of the week, markets were betting just a 9% chance of a rate cut on Melbourne Cup Day. Indeed, senior economist for APAC Callam Pickering was one who said the RBA must cut rates, but that was before the inflation data. He joined me. Callam Pickering, welcome to Close of Business.
Thanks for having me on the program.
Around 2 weeks ago, you said the RBA would be foolish if it didn't cut rates when it met on Melbourne Cup Day. Inflation data changed that?
Well, it certainly has. While the latest job figures are certainly concerning and the overall economic environment remains quite weak, it's safe to say that the Reserve Bank of Australia will not be cutting rates when they meet on Melbourne Cup Day. The inflation figures, unfortunately, were too high to be ignored.
How surprising were the inflation figures? There was an expectation they could run a little hot.
Yeah, there was certainly an expectation they were going to run hot, but unfortunately they ran a lot hotter than economists and the overall market expected. More importantly though, much higher than the RBA's latest forecasts. they had true mean inflation pegged at around 2.6% by the end of the year. And unfortunately, the inflation rate came in at around 3% over the past 12 months, which is obviously much stronger than the Reserve Bank was looking for.
Do you still believe that if the RBA doesn't offer more stimulus to households and business, that Australia is at risk of recession?
The economy remains really weak, and there are certainly some concerns recently about the pace of employment growth and the impact that that could have on the unemployment rate. There is a distinct possibility that the RBA is going to need to provide more support down the track to ensure that households and businesses continue to spend, continue to invest, and the country does avoid recession.
If we don't see rate cuts, a number of economists now and even the markets aren't pricing in a rate cut until May next year, if at all. If we don't see a rate cut, could we see a recession?
I wouldn't say that a recession is my base scenario. It's still relatively unlikely for a few reasons, one of which is that Australia continues to have very strong population growth. And that means that something really has to go wrong for us to have a recession. But we can't discount the possibility that for a lot of households, it could potentially feel like a recession because cost of living pressures continue to weigh on the decisions that they're making. They feel poorer than they did in the past. And the fact that the unemployment rate is rising means that some of these people are also going to find themselves out of work. And so when you combine all those factors, it may not be a recession, but it could certainly feel like that for a lot of Australians.
Well, the RBA has to balance the idea of full employment with low inflation. And as you pointed to, inflation is running ahead of the RBA's forecast, as is the unemployment rate. How big a risk is stagflation?
Well, that may be something we begin to talk a little bit more about next year. Employment growth has been much slower than the RBA forecast back in August. And of course, inflation is now much higher than the RBA forecast. That's not a combination that the RBA likes to deal with. It means they have to make some really tough choices. Now, based on their latest communications, they're obviously putting a little bit more emphasis on the inflation side of things. They think that is the bigger near-term risk. But if the unemployment rate does continue to rise, which is a distinct possibility, then the RBA may have to sort of rethink what their priorities are.
Well, Michelle Bullock recently said she wouldn't jump at 1 month's data, referring to the unemployment rate, which printed at 4.5% in September. She said it's not falling off a cliff. How quickly could the jobs market unwind if it does?
Well, I think it's important to note that it wasn't just a 1 month outcome. Employment growth has slowed over the course of 2025, and the increase in the unemployment rate in September was the culmination of that slowdown. If the recent employment growth figures that we've been seeing over the past, say, 6 to 9 months continues, then we could very well have an unemployment rate pushing maybe 4.7% by the end of this year. And certainly you could go higher next year as well. We have this interesting combination of dynamics at the moment where Australia's working age population is growing at around 2% a year, but employment growth has only been around 1.3%. And that's not a combination that leads to low unemployment. So while the RBA may not be concerned around a monthly spike in September, I think they will be watching closely to make sure that the numbers we saw there, that 4.5% unemployment rate, doesn't persist.
Do you think the RBA will then have to cut rates at a later stage? What's your expectation? How many cuts and when?
Well, given the RBA is clearly very focused on inflation at the moment, I think it is unlikely that they're going to cut rates again, at least within the next 3 months. Now, a lot of economists are talking about potentially a May rate cut. That's probably where I fall at the moment. I think the job market is likely to weaken further, and I think, potentially a softer job market, a relatively soft economy should hopefully help contain the recent inflation outbreak. And that will provide some room for the RBA to cut rates again. But I'd be very surprised if the easing cycle is over.
Callam Pickering, thank you so much for your time.
Thank you.
As rate cut expectations fell away, so did the Australian share market. The selling started on Wednesday after the inflation figures dropped and didn't ease up. By the end of the week, the ASX 200 index lost 1.5%. The All Ords fell by the same amount. Investors will now be looking ahead to bank results next week. Russia's attack drones in Ukraine are being met with Australian anti-drone technology on the front line. As global turmoil simmers, investors are piling into Australian defence stocks, including drones, lasers and more traditional military hardware. Alicia Barry has been investigating.
So this is a facility here and you see a drone approaching.
In a new age of warfare, this is what a modern arsenal looks like, designed to fend off a weapon that's traditionally hard to detect.
Once you've detected the drone, the next step is to defeat.
Drone Shield is one Australian company making a killing from anti-drone technology that scrambles a drone signal, sending it crashing to Earth. Technology Europe is desperate to get its hands on, with recent incursions into peaceful countries by drones linked to Russia. Polish Prime Minister Donald Tusk saying his country is at its closest to open conflict since World War II.
Unfortunately for humanity, but it's been a positive for Drone Shield. We're seeing a huge amount of demand.
Investors have piled into Australian defence stocks, with Drone Shield, EOS and Austal all seeing their share prices soar in a year of global turmoil. Global defence spending has shot up in the last 3 years, and a push from US President Donald Trump has seen NATO members commit to dramatically boost their defence budgets. An opportunity for companies down under.
Australia historically hasn't been a big producer of fighter jets or submarines or big missile systems. Okay, that's really been the world of the big boys. I think what we've got at the moment is we've got a couple of niche providers that are doing very well.
Electro-Optic Systems has sold one of its Canberra-made Apollo lasers to a European customer for $125 million. Defence Minister Richard Marles acknowledges a shift as Australia rises to meet European demand.
As strong as our relationship is with the United States, and I genuinely believe it's never been stronger, it would also be true to say that there are a whole lot of newer relationships with European countries which are fantastic, to be honest, for Australia's national interest.
Demand is also heating up for more traditional military manufacturers in Australia, from Bushmasters on the front line in Ukraine to Austal ships built for the US Navy. European arms manufacturer Kongsberg is now selling its Adelaide-made missile launchers to Denmark and Spain, consoles to Poland, and it's building Australia's first guided weapons factory, helped by federal procurement deals.
Supply chains can be vulnerable, and you don't really want to have all your eggs in one basket.
Companies like EOS and Drone Shield have overseas outposts, but they've chosen to keep the brains of the operation in Australia.
You have this great engineering talent, but at the same time you're not competing with shiny companies like SpaceX and Tesla and so on, so it's a great place to capture the talent.
EOS was started by a former leader of Australia's space program, Dr. Ben Green, and it also sells tools that track objects like satellites. Its current boss says the company's origins point to the future.
Any future war will be decided in space. I think that is undisputed among militaries.
In a month where we've seen a shaky peace deal in the Middle East and Donald Trump cancelling his plans to meet with Russian President Vladimir Putin, Russian drones continue to batter Ukraine. Analysts say demand for defence technologies is unlikely to let up anytime soon.
No politician in any of those nations wants to be sit there in a year or 5 years' time and say, we didn't do enough to protect our population.
I think that even now there's a view that peace will break out soon, and then we'll just all go back to normal, and this will all be a bad nightmare. And history tells you that it's likely to get worse before it gets better.
A humanitarian nightmare for many that's become a dream investment for some.
Crypto scams are alive and well, with victims the ABC spoke to losing thousands of dollars. At the centre of the latest criminal schemes are crypto ATMs, which are being rolled out across the country. Amidst a call to ban the digital money machines, the financial crimes regulator has found a high percentage of transactions are linked to criminal activity, as Rihanna Whitson reports.
Bitcoin Bitcoin ATM.
Bitcoin ATM.
Around the world, authorities are waking up to the criminal use of crypto ATMs.
They are increasingly being used by scammers
to trick people into sending money into their accounts,
sometimes leading to huge losses for victims.
Dorothy Dale lost her life savings of $12,500 after responding to a fake security alert on her computer.
They are very, very convincing. I mean, I'm a person who is aware of scam, and that's why I don't have Instagram, Facebook, and all sorts of things like that.
She was spun an elaborate story by a team of scammers who told her to withdraw cash and deposit it into a crypto ATM at her local grocery store.
He says now you walk into the supermarket and don't talk to anybody. All the time he warned me not to talk to anybody.
Dorothy is just one of many Australians losing money in scams involving crypto ATMs. Authorities say criminals are exploiting the machines as banks crack down on suspicious transactions.
It's a very direct way to move cash into an offshore account quickly and without any face-to-face interaction.
But despite the Financial Crimes Regulator announcing $5,000 transaction limits on crypto ATMs in June, another 200 machines have popped up around the country, bringing the total to more than 2,000.
There are a number of investigations underway. We've already seen some action taken in Western Australia in relation to someone who was dealing in the proceeds of crime, and there have been a number of other warnings issued to people who were potentially operating as money mules for criminal syndicates.
Crypto ATM operators argue the machines provide a legitimate way for customers to buy cryptocurrency. AUSTRAC has already deregistered one operator and has now fined another called CryptoLink for weaknesses in its money laundering and counter-terrorism financing controls. In a statement, a spokesman for the company said, "While we regret the shortcomings that led to this outcome, we are focused on strengthening our systems and controls to build a more robust, resilient and trusted platform." The federal government has flagged new powers for AUSTRAC to crack down on crypto ATM operators, but has so far ruled out an outright ban. It's a step that's already been taken in countries like the United Kingdom and New Zealand. It's also something consumer advocates and banks here are calling for.
Your heart breaks when you hear some of the scale of these scam stories, and ultimately the only way to effectively stop scams through crypto ATMs is to ban crypto ATMs.
Is there a legitimate reason why these things exist? I haven't found that legitimate reason yet, so I'm more on the side of we should be banning these things outright.
For Dorothy, any reforms will come too late. Her money is gone.
Hi, Dorothy. Hello.
But with the help of a financial counsellor, she got a $1,000 goodwill payment from her bank.
The issue we've got is consumers, the pressures on consumers. If we could turn that around, I think we'd find it was a bit more difficult to steal people's money.
I want to encourage people, tell somebody, whatever nationality you are, tell somebody.
Speaking out in the hope of stopping others falling victim to the same fate. The architect of the 2020 Samuel Review into Australia's environment laws is urging the coalition to clear the way for the environmental law reforms to pass. Professor Graham Samuel says opposition leader Susan Lee was previously supportive of his report.
It doesn't make sense, particularly as then Minister Susan Lee embraced the report. She knew what was in it. I consulted with her as we went along and produced the report and did the review. But it is my review. They are my opinions and my recommendations. But when the report was delivered to her, she embraced it and said, "Thank you very much. I applaud you for what you have done." Now, what Minister Watt has produced is exactly what the report recommended. It's all there. As far as the coalition's concerned, their position has been so inconsistent and so contradictory over that period of 5 years that I'm just bewildered as to what's now occurring. It strikes me that it's political games at its worst.
The government introduced the Environment Protection Reform Bill to Parliament, which it says will help business and protect the environment at the same time. But Labor's hopes of a speedy passage through Parliament look likely to be held up in the Senate. The US President Donald Trump has rated his meeting with Chinese President Xi Jinping 12 out of 10. During the 1 hour and 40-minute discussion on the sidelines of APEC in South Korea, Trump agreed to lower tariffs on China to 47% from 57%. The trade concession was made in exchange for Beijing cracking down on illegal fentanyl, resuming US soybean purchases, and keeping rare earths exports flowing. To get the market's view of the meeting, economic futurist Evan Lucas joined me. Evan, the market wasn't too moved by the meeting between the two presidents. What did investors make of it?
I think it was a known. We saw about this, Friday, a week ago, in terms of where it was. I think also it was more about a possible truce. That also probably hasn't eventuated anywhere near to the level that we were probably expecting. Then there isn't any really big detail on the things that matter from a market moving perspective. So if you look at things like tech, if you look at things like chips, if you look at the overall direction of investment and tariffs, they're all still there. Well, they were before. They've just been tweaked slightly down. So I'm not surprised there hasn't been a huge market reaction because A, technically there isn't a full deal. It's just a truce. And B, we haven't got a suite of difference that is probably materially different from what we knew before they were meeting each other on this Thursday.
Well, as a result, China is going to pause its latest rare earth export curbs for a year. Are there implications for Australian critical minerals miners here, given the Australia-US deal signed recently?
No, that I think is probably the big one from an Australian-centric point of view. So the fact that they are going to pause their resource keeping scheme is a positive. It therefore shores up US supply lines in the interim. That's all well and good. We do know that that also probably does, in the short term, put a little bit of downward pressure on Australian-listed rare earths. But, and there is a very large but here, the longer-term trend and the longer-term timeline in investment has already been put in place. The deal has been done. What happened between Trump and Albanese a week and a half ago, almost 2 weeks ago, is longer term much more important. The fact that the US is now diversifying itself and looking for streams in much more stable nations of supply, I think that's the bigger case. So yes, short term, there is a probable downside with that 1 year pause, but it is only a pause. And again, let's also make very clear here, this is a truce, it's not a deal. And the probability that there will be tit for tat over the next 12 months is still very large. We have seen that with the flex that the president did leading into it, the fact that they're suggesting they're going to start testing nuclear weapons again. So yeah, we can make that argument that the truce is a short-term problem. The bigger discussion point is that we now have an agreement that is actually locked in to that $8.5 billion investment over the foreseeable future as the US looks to diversify itself in what will be a very, very critical mineral going forward.
Well, back on China, Donald Trump previously announced a 100% tariff hike to take effect on November 1. That's essentially now. Is this off the table, given the tariffs are now going down to 47% as a result of this recent meeting?
So if you look at the average and what they're now saying with that average, that 10% decline, it has to be off the table because the maths wouldn't work. So that is off the table. The question more now is what it holds at. We still also know that some of the negotiations has been this idea that there will be a 3-tranche setup with what the US tariffs will be. There will be a standard 30% tariff on all Chinese exports, and then the more strategic it goes up, things like chips, things like minerals, the higher the tariff will get on a 3-tiered basis. That hasn't been suggested that that's off the table, and I think that's still the deal that the Americans want to negotiate. So yes, the 100% threat tariff that was originally there is probably gone because it doesn't work with the maths that now has an average 47%. But by no means have the Americans dropped their idea that they want this 3-tiered system in their dealings with China.
Evan Lucas, thank you so much.
Thanks, Alicia.
Research has found it might be cheaper to end poverty than use taxpayer funds to deal with the fallout. Economists looked at the impact of boosting welfare payments during the pandemic and found the economic stimulus created jobs, boosted government coffers and had broader social benefits. Daniel Ziffer and Gareth Hutchins compiled this report.
Poverty is extremely difficult and expensive.
Your life just is really, really hard, and it's really, really constant.
During the COVID pandemic, a coronavirus supplement doubled most welfare payments and substantially reduced poverty.
We also know that people spent a lot of that increase in income, so it potentially stimulated the economy.
With the extra income, Melissa Fisher ate more nutritious food, could afford medicines and attend a gym. When the supplement ended, her health fell apart and she ended up in hospital.
A few years ago, I had actually been diagnosed with malnutrition and scurvy.
With an estimated 1 in 7 people living in poverty, the impact is borne by individuals, but the cost hits everyone.
There's extensive research that shows that poverty is associated with poorer rates of health, lower rates of education, higher rates of crime.
Hayley Winchcombe's research found every $100 invested in higher unemployment payments has delivered a $24 social return. That social return included physical and mental health benefits and positive impacts on childhood development. There were other efficiencies too, like reduced hospitalisations and medical costs, less interaction with police and the courts, and lower lifetime use of the social security system.
It's certainly costing Australians a lot to have this level of poverty in the country.
The coronavirus supplement cost $20 billion for the year or so it existed. A recent report estimates child poverty costs the economy $60 billion a year, and that's just in New South Wales. Welfare payments have increased in recent years, not by nearly as much as advocates would like.
And that's all from Close of Business. For more on those stories, you can go to our website and catch The Business Monday to Thursday evenings at 8:45 Eastern Daylight Time on the ABC News channel and after the late news on ABC TV. I'm Alicia Barry. Thanks for watching.